I still gotta change that thumbnail. Alrighty, hello everyone. Happy Tuesday evening for everyone in the US. One second. Fix this mic setup, that way we could get started. Alright. So, welcome to another live stream. Haven't done one in a while. Been super busy with work, even though I just finished school. Well, took a break from school because I'm supposed to be starting leave here and going back to the States and back home for leave, so I took a break for school, but now I'm super busy with work. But just wanted to go over some stuff in the market just because I haven't done it in a while, and kind of just show you all what I'm looking at. It is 1:26 a.m. my time because I am in the UK, which means it is almost 8:30 New York time. So yeah, let's get started. So first we'll go with NQ because that's what I trade mostly now. I don't know why. Okay, there we go. Okay, cool. So this is NQ on the date. Well, let's look at the weekly. So the weekly, we're kind of in a weekly fair value gap. I don't really pay attention to the weekly because everything that I do on an intraday basis, I can get done with just on the daily, the 4 hour and the 1 hour. So, but yeah, this is essentially what we're looking at. So the past, let's see. Well, not this week, not last week, but the week before last week, 1, 2, 3, 4, 5, 6 weeks straight, we've just been going up. And if you look at this from an accumulation, manipulation, distribution standpoint, we've got accumulation, manipulation, distribution, and then we consolidated for a little bit, manipulated down, took out that liquidity there, delineated by the red line, manipulation, and then we've just been in distribution, like I said, the past few weeks. So now we're getting a little bit of a pullback. So I want to see how low or how far we pull back. Like I said, we already have, let me get rid of this stuff first. So current interval and below. Current interval and below. What the heck is that? Oh, that's the volume imbalance. Okay. And then let me get rid of that as well. This is no longer all-time high because all-time high is up here now. Okay. So now when we go to the weekly, it should be blank. Yep. So if you look at this, we have a weekly fair value gap here in the form of a BISI, or a buy-side imbalance, sell-side inefficiency. I'm just gonna mark this first because that clearly isn't the same. Okay, so I saved that just because it was a different setting from my other stuff, because I redid my chart. If you haven't noticed, before it was black background, green and red candles. Now it's kind of like a light, almost like a paper color, and then I have orange for bullish candles and then gray for bearish candles. So a little bit more simpler, kind of easy on the eyes theme, but kind of like a cream theme. So yeah, but yeah, we have a weekly buy side imbalance, sell side inefficiency. Why is that still okay? But yeah, normal fair value gap operation, right? You would have the fair value gap. This is a buy side imbalance, sell side inefficiency, so that's why it says BISI there on the right. So normal operation would be a touch into this and then back out. So that would be swing high created, and then internal liquidity taken, and then we would go for external again. That is the sequence. However, considering we've been pushing up for the past few weeks, I would think that we would get a much deeper pullback than that. If you look at the daily, so let me get rid of the weekly. So if you look at the daily, we have a daily BISI here, and then we have another daily BISI here, and then we have that volume imbalance here because there's no candle between this candle and that candle. So that's your volume imbalance. And if you look at this, we have the buy side imbalance, sell side inefficiency, pull back, went a little bit outside of the line. So we went a little bit outside of the fair value gap with the wick. Candle body still held above the midpoint of it, your consequent encroachment, and then we ran the external. So this is exactly what I was talking about on the weekly. So you had a swing high, pull back into the fair value gap, balances out the inefficiency, and then it runs for external, which was that. So now we're pulling back deeper. And if you look at the daily, you have a close below the halfway point here on Monday, and then you have a close outside the low of it yesterday, and then now we're trading today. So now the question is are we going to pull back up and out? Which, if that's the case, I would want to see candlestick close either above the halfway point here or above the fair value gap completely. That would signal that we're bullish to then pull back and then go higher. Or what we could do is, since we're already showing bearish tendency on the candlesticks, then this would kind of pull back just slightly, and then we would dig into the lower daily fair value gap, which is ultimately what I think is going to happen. Or at least, you know, we'll run out this low right here. So this is your sell side liquidity. Let's just go here. Yep, so this is your sell side here, and then at that point we'd already be digging into this. So my next target short term is at least to 28,549.75. Or actually, well, the low of this candle is 28,541. So that would be my short-term target, but I would need to see rejection off the upper portion in here. Preferably, you don't want it to go back up into the upper half of this fair value gap if we already got a close like this. So, you know, maybe a wick out the top, but as long as the candle bodies close, preferably underneath the halfway point, that's fine. So like, it could wick out the top like it did here, but as long as the candle bodies show that price is willing to continue going higher and it's showing sensitivity, in this case in the lower half, we want to see sensitivity in the upper half on the way down. That's how you can tell where it's going. And I just realized that this is a breaker, so you have a high, low, higher high, and then we made a lower low. So this right here is a breaker, which we don't even have. Or, well, I guess it could be a, you know, change in state of delivery. So, I mean, even just with that line, let me make it blue. Even with just that line, like, you can see the candle body is respecting that. I mean, that respects it to the tick, right? So we had swing high, pull back, change state of delivery with Monday's candle, respected that body wise to the, well, okay, maybe not. Let's see, because this closed at 29,134.25, and then the open of this is 29,135. So it's off by 0.75 ticks. Or it's off by 3 ticks, 0.75 of a point. So not perfect, but pretty interesting, huh? But yeah, there's your chain state of delivery / breaker. So yeah, I'm expecting this to go down. And if you look at it on the short time frame, that's kind of what we're doing, right? So this was yesterday. Yeah, this was yesterday. So you have Asia, London, 0830 data. I don't know if we did have data yesterday. I should probably check that. Doesn't always. Let me see. So this is the calendar for this week. So yesterday was Monday. Yeah, yesterday was Monday. So there was actually nothing at 0830, but I do have my indicator settings there to show in case we do. Yesterday for me was Tuesday, and we had news only at 10. Later today or tomorrow for you all in the States, we have 2 p.m. So really nothing in the morning. But yeah, we can see how Asia's setting up already so far. So yeah, we would want to see price come up. Remember, we want the candlestick on the daily to respect the upper half of this. So it can go as high as here as long as the candle body, doesn't close in the upper half, and then we would look for a move down. So that's what we're looking at. But yeah, going back to the daily. There you go. So yeah, I'll probably extend this to the right. That way we can see that purple. This is not. I'm gonna have to do it with this. So daily chain state delivery. That way we can keep tabs on this. And remember, Monday's candle is already respecting it. So that's good. But yeah, short term, I would want it to come down to here. And then probably get, lower than that. Sell side. And then I'll make this purple as well. This is short term. Short term sell side. Yep. Okay. But yeah, that's ultimately what I'm expecting on NQ. Let's look at ES. Kind of the same thing. Got the same weekly open here. So same thing, high, low, higher, high, change state of delivery here. Yep. And then with the daily, so this is already an inversion for value gap. Okay, so on the daily, we have a fair value gap here, and then we have another one up here. So this is a SIBI, sell side imbalance, buy side inefficiency. Ooh, that's not. So that, I haven't changed that yet. So this is what I'm gonna do. Daily SIBI, save as, daily SIBI. Cool. Okay, so we have a daily SIBI here, we have a daily BISI here. And then as you can see, price did the change state of delivery, we retraced into it. and then now we're coming back down. So this right here is also another daily BISI. And then same thing over here. So if we're looking at this in terms of a range, so if we start pulling back from here, you can either go off of this low to this high, and that's your dealing range, right? So 50%, if we're gonna pull back, 50%, if it wants to give us a full 50% retrace, it would be down here at 6,941.50. And then if you want to use, let's say you want like a much shorter time frame, you could go off of that. So this swing low to that swing high, so this is your dealing range. This is more for like higher time frame. If you wanted to focus on a much shorter time frame, like you're looking at short-term targets, then yeah, this 50% is here at 7,308.75. So this is a more realistic target in the short term. And if you look at where it's lined up, it's also in this fair value gap, which if we're looking at NQ on the daily, our sell side target was here at 28,541, which is Friday, May 8th candle. So Friday, May 8th candle is this one here, which would put short-term sell side here. Short-term sell side. There you go. So same premise, except this has an inversion fair value gap. So we have breakout, pullback. So this, everything here is a balanced price range because we have upward and then downward. So, and then we had this next candle pull up into that inversion fair value gap, and then now we're heading down. So this is essentially what is going on, right? So again, short-term sell side here. So yeah, my weekly objective or weekly target is at least 7,336.25. That is my short-term target for the week. Realistically, if we are gonna pull back substantially, I would think at least 7,320, maybe even 7,300 area is where we would pull back to. If we look at the calendar again, we have news later today at 2 p.m. Then we have orange folder news on Thursday at 8:30 and 9:45. And then we have 10 a.m. consumer sentiment on Friday. None of them are red folder news, but these are still market moving economic events. So Thursday, Friday is probably where it's going to send it lower. And you could also look at not just 50%, but also optimal trade entry, which is this range here. And that lines up with this daily SIBI. All right. So that's ES. Don't know what else you all want to look at. I haven't looked at SPY in a while, but I mean, same premise. If we're anticipating the indices to go lower, SPY is more than likely going to follow. Look at the dollar. I haven't looked at the dollar either. Let me see if I even still have. Don't think. Trying to find which one I had drawings on. Alright, I guess I deleted them. because this is a weekly. Okay. So if we're looking at the dollar, the key thing that jumps out at me is this manipulation here. So we have consolidation, manipulation, distribution. This looks like it's just a pullback, and then we go higher. And then these are key liquidity points. So we have liquidity here, here. This put in the low. Think that is a lower low. Yep, it's a lower low. Because this low is 97.632. This low is 97.625. So it took out that liquidity just barely. And then we started heading back up. So yeah, this is looking bullish actually. Which would play into the anticipation of indexes going lower and SPY going lower. So yeah, I would think that dollar is going to come up to this buy side here at 100.643. That's the high of that candle there. So that's buy side. Yep. Maybe a slight pullback, but I am anticipating these lows to hold because this low took out that sell side here. So this is your... Oh. Oh, that is the thing. Okay. I gotta take off the extend. There you go. So yeah, this sell side got rated there. And then after we got above here, that's showing willingness to go higher because we took out liquidity, change in state of delivery here, pulled back slightly, and then we started going higher. So yeah, I think that, you know, we might get another pullback and then we would go higher. Let's see. Could also fib it. This is like a 4 hour, so from here to there. Yep, so 4 would be about right here. Yep, which is exactly where we started hitting the lows, and then we bounced off of it. Yeah, so you can see that line there. So 2.5 right here. I didn't even do this on the indices when we were looking at it, but yep, there you go. So manipulation leg, 2 standard deviation. We did retrace off of this area slightly. Took out that short-term high there. And then we went lower down to 4. That's where we hit the low, pulled back, dug into that volume imbalance, came back down again, swept liquidity here, and then that's when we put in that change in state of delivery or the market structure shift, and then now we're going higher. So yeah, I would think that, you know, maybe even this. I would think that this would at least also be a target. But if it's going to go for this, it's likely just going to go for that anyway. So that is what we got on the dollar, which again would play into the anticipation of us going lower. I don't know what this line is. Yeah, that's the dollar, that's the indices. We looked at SPY. Don't know what else you all want to look at, but yeah, definitely anticipating bearish moves this week. Maybe they'll hold it off until next week. Let's look at it was the daily, if I remember correctly. So the reason why I also think that we'll get a pullback is because of this. Yep, so we went past 4 there. 2, 2.5. We go off of that. That puts us at 3. Yep, so manipulation, you fib the manipulation, that brings us up to here. There's your 2, 2.5. We hit 3, 3.5, and then now we're starting to pull back. So if you were to draw this out, I bet it's on a quadrant or a halfway point. Yep. There you go. So look at the candlesticks on that. Respecting it, and then now we're coming back down. So yeah, 2, 2.5 also lines up with this lower daily buy side imbalance, sell side inefficiency, which is what we're anticipating on the move down. So yeah, I think that we'll get this sell side sooner rather than later. And then from there, we're either going to continue down or we're going to just do like a short pullback and then run to 4, because 4 is way up here. Yeah. So the usual price sequence after the manipulation is a run to 2, 2.5, which is why it's usually a reversal or retracement area. However, if price is super bullish, it'll just run to 3. So it either goes 2, pulls back, sometimes as low as 0.5, then it goes to 3, then it pulls back to 2, and then it goes to 4. So that's sequence 1. Or it goes from manipulation straight to 3, back to 2, and then to 4. So there's 2 scenarios based on the fibs. There's a third one where it goes manipulation and then 2, 2.5, and then it reverses, which is why I have it listed here as retracement or reversal, because it could do either. And then that's pretty much it. Yeah, there's only 3 ways. So right now, I think we're doing 3.5 to 2. Back to 2, 2.5 area. So that's, yeah, I think we're doing this. Because obviously we're not reversing off of 2, 2.5, otherwise we would have went down there. So that is what we're looking at. Don't know if you, I mean, if you guys want to put something in the chat, by all means go for it, and then we'll take a look at it. But yeah, I'm pretty much done. Let's see. Yeah, we're gonna keep that chain of state delivery there. Hopefully you guys have been doing well lately. Let's see here. I am actually trading. Let's see. I've been doing good and I've been getting wrecked, but me getting wrecked is really just for me being stupid, if I'm being honest. I was so close to getting a $10,000 payout. I actually would have got it this week if I wasn't being fucking stupid last week, but because I had five 50K funded select accounts on Tradeify, and I think I was trying to remember how far away I was. I think I was 3 days away. I was 3 days away from getting a $10,000 payout, because each account you can get up to $3,000, which is really only 27. Yeah. Oh, 13,000. So I was 3 days away from a $13,500 payout, and I fucked it up because I took a loss and then I wanted to force it to get it back. So that's, yeah, just me being stupid. So I lost it, and then I got 150 select, and I actually had a really good day on Monday. Where's Monday here? Monday, Thursday, Friday, Saturday. Yeah, so Monday I actually had a really good day because I got a short, if I remember correctly. Or did I get the long? Oh, no, I got the long. Yeah, I got the long. I remember now. So I actually have almost $14,000 profit on this account. Let's see here. Trying to see if I can. Never mind. I'll just fucking drag it over. Yeah, this is my 150K funded select account with Tradeify. So yeah, if you look at it, I'm up like 14,000. Because you start with 150 and it's at 60. It's at almost 64,000, and right now I'm only trying to get the 5 days, the rest of the 5 days of 250. That way I can get that payout. So I got, well, after today I've got 2 more days. So tomorrow and Friday, if I make 250 tomorrow, on Thursday, and then Friday, then I'll be able to request a payout on this, and then I'm going to use this part of this payout to get 4 more select 150Ks, and then I'll be stacking those up, and then hopefully get those 5 to live, and then go from there. That's the goal. At least get 5 150K accounts over to the live. But yeah, like it's been easy, but it's also been like, I wouldn't say hard. It's just me being stupid, really. It's like, I know I probably shouldn't be chasing or revenge trading, or I probably shouldn't be, I probably shouldn't be pushing it when I know I shouldn't, because I just know like my setup's not there, and then I just fucking do it anyway. But yeah, I have gotten better with it, but it still creeps up every once in a while. And yeah, this is the execution I took earlier. I took it on a 1 minute chart, because if you look here, I'll explain this trade. So if you look here on the daily, this daily fair value gap, so we have that daily change in state of delivery, we have the daily fair value gap, and then I split it into quadrants. So there you go. So if you take this, split it into 4, you get 1, 75, half, 25, and then 0. And then I kind of just removed the 50 and the 1 and 0 to only focus on these. But if you look at this, right, we have the end dog, the new day opening gap for today, which opened up at 6 o'clock. So we have the 6 o'clock open here. You take that opening price from the closing price the previous day at 5 o'clock. That's your end dog. Project that out. And then you have a run higher. We take out liquidity here, hit the low of the daily fair value gap. We pull back, got back above this first presented fair value gap on the 4-hour chart using 5-minute fair value gap. So this is the second one actually. First one is, oh, the first one, actually that's the third one. So the second one is the third one, the first one is the second, and then the first one is the one that just says regular H4 M5, which doesn't even, oh, it's right here. So this is where the first one is. So first, second, third. So we got back above the third one, got back above the end dog. We took out this buy side here with a displacement, which told me that we are going to go higher once we pull back. So once we got up to here and then we pulled back, that's when I entered, and then I basically just rode it up to the 25, the lower quadrant. And then after we hit that, that's when it came all the way back down, and then now we're kind of working our way back up. So that was my $250 trade today to secure today's profit. And I think I showed my wife this earlier because she was like, can you even make $250 a day? And I was like, $250 a day is freaking easy. I think it was like 50 seconds. I counted it. So 5, 10, 15, 20, 25, 30, 35, 40, 45, 50, 55. Okay, so maybe 55. So like about a minute. And, you know, this is how it looks on a 5-second chart. But 1 minute wise, yeah, I was really just riding it up to that quadrant. And then, woo! So yeah, 2 more days. I get a $5,000 payout, which is $4,500 after their profit split. But yeah, looking to expand that after this payout. I'll get 4 more, which I think is 800 some, because I think it's 220. Let's see. Trying to look at the price here. Yeah, so a 150K select is $221. Yeah, so select 150K. Yeah, $221. So 221 times 4, yeah, it's like $884. So I'll use part of my payout to get 4 more, and then I'll slowly build those up while I'm building up the first account. But yeah, what time is it? Oh, it's 9:04, which means we just opened up another hourly. We are deep in discount, so we're probably going to run a lot higher from here. Let's see. Oh, I'm still in the long. Yeah, so like if I was looking at this long, anticipating the end dog to keep us up, and then I would shoot for at least that, or up to here. what is this? So this is a 1 minute chart. So if you were to, so this is the bottom to the top. So we hit 2.5. So 2.5, retraced. We hit 3 here, we pulled back. So now we would anticipate a run to 4, which would be like right here, which would be back at that quadrant, literally to the tick. To the tick. We might actually come down to here though. I guess it depends how low this 1 hour candle wants to manipulate, because this is 1 hour candlesticks here. So it can go as low as the 50% of this candlestick's wick, because that's the lowest. Let me just do optimal. Yeah, see, so like to put your stop like down here. And I would at least shoot for that. Oh, well. Yeah, I guess because there's a fair value gap in here too. So my stop would go there. Target at least 4. Need to give it some room to come down. Standard. This is manipulation at 2.5, which still puts us here. Let's see how it treats this end dog. This isn't trading advice. This is a paper trade account. Don't follow it. You're gonna lose money. So yeah, really just standing by for any questions, or if you want me to look over something, but let's see how this trade plays out while I'm waiting. Yep, there we go. So nice bullish push up there. Let's see this next 30-second candle pull back. Two, 1, 0. Pull back onto it. It might just take off from here. Yep. So if I still had that first trade, it wouldn't have stopped me out because I had my stop underneath the end dog. But I wanted to see how it treated this first. Yep. Yeah, we're probably just gonna run higher from here. 30-second, pull back. There you go. So I added at the low of that daily for value gap. So we have, oh, what is this? Okay, so 30-second chart, we have a pullback down into the end dog, unwillingness to come out of it. We have a push higher. We have a 30-second change state of delivery here. We pulled back onto the low of the daily for value gap on this 30-second candle here. So we pulled back onto it. Yep. So this, yeah, it's probably going to run here now. So we took out that short-term liquidity. We're ultimately shooting for 4, but if it's going to go for 4, I'm willing to bet it's probably going to go for this high right here. And if you were paranoid about the trade, or if you were, you know, like me, where I took a $1,500 loss on the first trade, technically, because I got out of it at a loss, even though it wouldn't have stopped me out down here. Let's see. We'll put that back there. Just because it could still come back as low as here. But I'm not anticipating it to, just because of... let's see. Yeah, because that was the 20... That was the 910, the end of the 910 macro. So I don't want it to come back down into here. I want it to just blast through. And then take out that high. And this is all transferable. I mean, the same analysis that I used on the daily chart, I used here on this 30-second chart. It's fractal. As long as you know what you're looking for and how the candlesticks play into the PD arrays and all the stuff you're using, like, you could trade on the 5-second chart if you really wanted to. Same concept, right? Low, high, lower, low, higher, high, breaker. So this is your breaker, which is exactly where I marked out the chain stated delivery on the 1-minute chart. We got a short pullback here onto it, and then we ran higher. This pullback was where I added the second contract. And then now we're going higher, pull back. So I would like for this not to come below there, unless it takes it out just short-term sell side and then rallies higher. But on the 1-minute chart, it looks like we might actually pull back deeper. So that's why I dragged my stop loss down here, because it still could come down here and then before running higher. But we're ultimately looking for this. That's what we're looking for. Let me get rid of that. Okay, and then we'll get rid of that. Okay. So yeah, looking at this, we've got 2.5 here. So that's where you got your retracement. Okay. So you got your retracement there. And then we have 3 is here. Three standard deviation. And then we have 4 right here. Yeah, look at that. Look at that. Magic, isn't it? And this isn't even like the full move. Like if I was watching it down here, I probably would have entered down in here on this, because that's a inversion for value gap there. Hate that I got it freaking. Ew. Well, let me save this as an inversion for value gap first, because that was ugly. Save as 5-minute inversion for value gap. Okay. But it is actually a 1-minute inversion for value gap. Yeah, so it's a bullish 1-minute inversion for value gap. And the reason why I would have entered there is because we took out liquidity here. And then we also didn't take out that low, or did we? We did not. Okay, so unwillingness to take out that liquidity. We have low, high, lower, low, pulls up, goes back into the inversion for value gap, runs higher, and then it uses this right here, right there. Or is that a... Oh, that's a suspension block. Yeah, so it would be down there. There you go. Look at that. All right. And that's right after hitting the retracement reversal area. So after running up to 2.5, we see the candlesticks respecting this inversion for value gap. So this is a 1-minute inversion for value gap here. All right, respects it there again. So boom, boom, goes up to 3, pulls back to, well, goes deeper than 2. But now we're in this area again. And we're basically playing the 1-hour expansion. So see how all these 1-hour candles have wicks on the bottom and the bodies barely extend out. So after we had this 1-hour candle come all the way down to here and then, you know, kind of expand higher, we're anticipating this current 1-hour candle to just manipulate shallow and then expand higher. And then we're targeting this 1-hour candle's high, which is that liquidity there with the red line, which is a little bit above the 4 standard deviation from our manipulation leg down here. So that's the narrative as far as this trade goes, right? So I entered a little bit early, got out, even though it wouldn't have stopped me out anyway. And then now we're back to what I was originally anticipating. So yeah, this, I would like to see this consolidation just blast out and take out that buy side. So I did say that I would want to see it not, you know, preferably not pull back this low, but it could. Because you have this fair value gap there. And then you also have this one here as well. Yep. So yeah, it could come down as low as here, but we preferably don't want to see that. And then this is a 5-second chart. So if we're looking at this as a consolidation, you would think that you would get a manipulation down and then expansion higher. Or it could do the opposite. It could go manipulation up and then expansion down. But based on what we're looking at right now, we're not anticipating that to happen, right? We're anticipating it to go higher, so. But I am willing to stay a little bit longer because I am still waiting on questions in case anyone wants me to go over something specific, and then I also want to see this trade play out. That way you guys could see how I trade. And yeah, like we're up 1900. Okay, maybe like we're up 400 technically because the first trade I took was a $1,500 loss. because I got out of it early, even though I didn't need to. So I would be up a lot more than just 400 if I just held the trade. Let's see, because I don't even know where I got in. Let's see. Yeah, because I wasn't along, so I sold it, and then I bought back at 943.25. So 943. Well, that's like way up here. 943.25 is here, and we're currently up about 40 points. So I would just say 41 times 20 times 2. So yeah, I would be up $1,600 instead of taking an initial loss of 1,500 and then now being up 22. But yeah, it's slowly working its way up. But yeah, like I said, like it's not even like the full move, right? Like if I got in down here, that would be a lot more, because it would be from here to like where we're at now. It's like 130 points. So even if I just took one contract, that's $2,600 already from that inversion for value gap up. Or, you know, let's say I wanted to be safe and get in on the retracement after the 2.5 retracement, and then I saw this holding, then I would be entering, you know, somewhere in here, and that's still, you know, 80 points. Still $1,600. And I mean, even that trade that I took on my funded account, like that was just a small move, but imagine if you had 5 contracts, right? Like it was a $260 trade on just one mini. So imagine if you took that scalp for 5, right? That's $1,300 right there. And that was just a, what, sub 1 minute trade? It was like 55 seconds. So, okay. So now I could bring this to break even. Because now, yeah, I still don't want it to come back this low. Let's see. But look at that fair value gap there. That might give it some resistance, because that's a 5-minute SIBI. Let's see what it does here. So there's that 5-minute, pushing it back down. Yep. So this is an 1/8 right now. So it's rejecting that 5-minute SIBI plus an 1/8. So I took the quadrant and then I split that in half, which gave me this black line, which is where it's rejecting from. Let's see. Actually, yeah, we'll just put that there. If it stops me out, it stops me out. Half of this candle is right there. So right here. Let's see if it respects that though. Nah, I think we're gonna come lower. So there's that accumulation, manipulation, distribution. Optimal trade entry of this dealing range here. I re-entered here to see if the optimal trade entry range will keep us up. Because if it does, this is almost bottom ticking it. But it would need to like run up quickly. Don't like that. And there's no wick on the bottom. It's probably gonna sweep these lows here. Yep, there it is. So as soon as that candle closed below the halfway point, or below the 79%, that's indicating that it's more than likely to come lower. So if we were to take this and make that the dealing range, then 50 would be here, 62, 70, yeah. Realistically, we should be trying to get in somewhere lower than 50. So let's see. I hate this color. Okay. Ah, you're not gonna fill me in now? Come on. Wicket. So these no longer matter because we're way past it. Relative equal lows. There we go. Okay, so we officially hit discount of the dealing range. So let's see what kind of reaction we get off of this 50%. Nice reaction off of the 50%. So I would want to see a blast up from here. There we go, just like that. Silly me. Yeah, those relative equal lows here. Prime target for liquidity. Yep, so 5-minute dipped in. Now we're heading back up. Next 5-minute candle opens up in 1 minute and 8 seconds. So I would want to see the next 5-minute candle kind of just manipulate shallow and then we go higher. Because we already dug into this fair value gap here on the 5-minute. In 30 seconds, it's going to open up. So if you've been keeping track, we are now down $2,000 because the first trade was negative 1,500. The second trade was a break even, and then the third trade was like -5. Okay, so candle bodies are respecting the halfway point of that 5-minute BISI. So let's see if it has any willingness to go higher from here. Really need to see a nice push up though. All right, so 1 minute looks decent. 5 minutes, not really looking. Because this can still come way down here. But candlestick wise, it's even supported by the upper quadrant of it. So let's see here. Quarters. Yep. So if you look at that, candlesticks are holding. Nah, it's not perfect, but All right, so 5 minute put in a swing low. So we want to see the fourth candle after the swing low. So 1, 2, 3. You need 3 candles to make a swing low. So you want to see the fourth candle not come any lower than the middle candle. If it does that, it's probably just going to keep going lower. So we still got 1 minute and 13 seconds until the next 5 minute candle opens up. So all right. Fourth 5 minute candle. I still don't like how that has no wick on the bottom though. Which means it's gonna have to come back down to form it first before it starts expanding. Bottom wick has been formed. Okay, so let's see if we get expansion now. So ideally, we don't want it to come back below the halfway point. So I'm gonna drag that up. We're back above the inversion fair value gap. So let's see if we get expansion now. All right, sweet. Nice bullish move. Nice bullish move. Yep. Okay, cool. So now the 1 hour candle is expanding. So if we get rid of this, yeah. Shit, it might even come up to here. $8,000 day. Well, minus the 2,000 that we lost initially. Nice move. Need to get above this one though, because then we'll be able to use that as support, and then bam. So what we could do is do sell one limit here, and then we could do the last one there, and then our stop is already in profit, so we are Gucci. And then let's see here. Yep, so quadrants held on the 5 minute BISI. Okay, and then just trying to make sure that I clean this up. Okay. So there's the 4 hour on the top left, 1 hour on the bottom left, and then we have the 5 minute on the left side. Okay, so looking back at the initial trade, right? We were looking at it on the 1 minute. So I was anticipating the low of the daily fair value gap to hold us bullish and then go into my take profit, but I guess I wanted to dig deeper into the 5 minute fair value gap and then also take out that relative equal lows, which was kind of a oversight on my part. I should have saw that equal lows and just waited for that. But 5 minute chart, 5 minute BISI holding. Five-minute BISI holding. Candlesticks came down, repriced the upper half of it, digged a little bit into the lower half, but we didn't stay there, which is good. Candlesticks respecting the upper quadrant, just barely. Sometimes you'll see it, it's like to the tick, respecting it. Like what we saw on the daily earlier. And then, yep, 3 candles to form a swing low. 4th candle manipulates slightly and then runs higher. And then now we are back up in this area. So looking at the 1 minute, yep, we've got premium to discount, filling in the inefficiency, run higher. So now that we got this move up, we want to see a small pullback and then take out our first take profit and then potentially the second one. But stop is in profit. If we wanted to put it at break even on the day, it would be like right here. So let's see what happens. It might. So worst case scenario, it takes me out at $2,100 profit, which would put us at break even on the day. Best case, we hit our TPs, but this is a 1 minute. We might still pull back. Next 5 minute candle opens up in 10 seconds. So this is probably gonna stop me out unless it runs from here. I mean, because it is already bullish from here, so I would expect barely any retracement. And we are playing into the 1 hour power of 3. Oh, we actually just hit the macro as well. So 950 to 1010, that would be the end of the macro. So 1010 would be right here. Now we'll do red. Yep, so 1010 macro ends there, and then it started here. Yep. Yeah, so the macro should take us onto that TP. Oh man, this needs to hurry up so I can go to bed. It's already almost 3 o'clock my time. Alright, new 1 hour candle is about to open up in 50 seconds. The next 1 hour candle will probably stop me out if it doesn't just run to target. Actually, I'll just remove these. Holy shit. All right. I think I am done, guys. Take my $1,400 profit on the day and just run away, because I still think it'll hit that, at least our first TP. I still think it'll hit that, but yeah. So first trade down 1,500, second trade break even, third trade down 500, and then this is the fourth trade and we're up 3,200. So net profit on the day is like $1,300. I still think we'll get that TP, but I gotta go to sleep. It's already 3 o'clock in the morning, my time. So hopefully you all learned something, or at least see how I trade. But just to recap, if you weren't here earlier, anticipating short-term bearishness on the indices and bullish short-term for dollar. So our analysis coincides with each other, because usually if the dollar goes up, indices and equities go down, and then vice versa. If dollar goes down, equities and indices go up. So yeah, if you want to see the analysis and basically what we were looking at and my explanation, you would have to go to the beginning of the video. But yeah, there you go, up $1,700 on the day. Could probably be more, but I'm not gonna stay up any longer. So but yeah, that's how I would have managed my trades if I was trading Asia right now. So not bad, $1,300 day. It's a lot more than what people usually make at their 9-to-5 job. So but yeah, that's it. Hopefully you've been doing well lately. Have a great rest of your week. I will try to send out some alerts in the Discord. Maybe stream tomorrow or Thursday, we'll see. But yeah, enjoy the rest of your evening, and I'll see you all later. Bye everyone.